Hello everyone, good day, whatever time you're watching this video from. Welcome to this channel. Now, as I promised, I will give the breakdown detail of what it entails about forex trading. And as you know, this is the first video on the essentials of forex trading. So let's get forward. Now, I'm starting with keywords and terminologies. As I guessed, it will be what you need the most as you embark on your journey of learning forex trading, for me to explain what you're about to engage, so that at least you have the understanding of what you're about to do. Simply means exchanging a currency with another currency at a specific period, a specific price, and at a specific time using a set volume. Whether a profit or loss happen is still called trading. Now, this may be a kind of bulky and tricky and complex. I will show you pictures step by step and break down what I mean by this. Now, exchanging a currency with another currency. Now, let me go to my trading view. Let me show you what it means to exchange a currency with another currency. So let's look at the most popular and common traded pair, Euro USD. So what it means by exchanging a currency pair with another currency pair. Now let's look at Euro. We all know that Euros is a country's currency and USD is also a country's currency. So what I said there is exchanging a currency against a currency. Now I will go deeper when I'm talking about currency pairs. I'll talk to you what are code pairs and what are base pairs. Now, for now, just know that we are exchanging a currency with another currency. Now just look at the top where my cursor is. It's showing also Euro USD. Now we're exchanging whatever thing we're going to do on this pair. We're exchanging Euro against USD. Now that is what I just said. Now it's not only about Euro or USD. We also have many pairs like that. I will explain what pairs are when I get to currency pairs and asset. Now, as you can see on my cursor, now we have two pairs. We have two currency pairs. We have two currency, and each of these is one currency against the other. Now let's go to the definition. As I started, exchanging a currency with another currency. Okay, so let's just go with the normal Euro USD. Now we're exchanging Euro against USD. Let's go deeper. At a specific period. Now when you are going to trade, let's take for example like right now, if this prints my setup, this is the period I'm about to trade. Like now what you're seeing on my chart right now, it says exchanging a currency with another currency at a specific period, a specific price. Now if we look at the current price of the Euro USD is 1.02845. Now this is the current price. If at all I'm trading or I'm exchanging this Euro USD, this is the current price that I am going to place my trade. That is what I meant there. Specific period, specific price, and a specific time. Now if you look at the time, we're still in London session, so when I get to sessions I'll explain what I just said now. So specific time using a set volume. Now on the aspect of volume, I think a picture will explain that clearly. I have this, and let me show you. Okay, now let's take for example of this trade I took for this trade within 2 weeks. So now look at it. Now this is Euro JPY. I'm exchanging Euros against JPY. Now look at the volume, 0.51. And look at the time, and look at my side, and look at the profit. This side signifies profit or loss. Whether there is profit or whether there is loss is going to be signified at this side. So let's go to our definition. Exchanging a currency with another currency at a specific period, a specific price, and a specific time using a set volume. So one of the key things you need to understand in forex, whatever you are going to do, you are going to set the volume at which you want whatever transaction or whatever position you want it to be. You must have to set a volume. Whether a profit or loss happens is still called trading. Now trading is not all about winning. In fact, it should be to your advantage to accept that in trading one of the best things that happen to you in trading is losses. So it's part of the game. Let's go forward. Now, Forex means foreign exchange. Foreign exchange market is one of the financial market of which we have the bond market, the stock market, the cryptocurrency market, and commodities. And these are part of the things that you should get acquainted with. The Forex market is the largest financial market in the world with a liquidity of over $7 trillion daily. When I first heard that, I could not believe it. In fact, the figures I could not get in my head, $7 trillion daily. So what it meant by that is, when you're so good in your trading, you can take responsibility of your country. Let's get forward now to the terms and terminologies, the words that you hear traders talking about. You hear traders telling this, I'm doing that, I'm doing this, blah blah blah, blah blah blah. Now, buy. This term refers to purchasing a currency pair in expectation that the price will rise so that you can sell. Now, let's go to the chart to show you what I'm talking about. Now, if we look at the chart in this aspect, let's assume I come to the chart around this zone. And I want to take a buy position. Hopefully that if I take the buy position here, let me highlight it so that you see what I'm talking about. If I take the buy position here, the market will rally up to this place, then I can sell it back to the market. The market is always willing to accept what it sold to you. So this is what it means. Buy. When you are buying, what it means is that you are buying the market from a lower position, hoping to sell it in a higher position. And meanwhile, when you are buying a low price. Look at this psychological level, 1.04500. When I buy from this zone, I will be hopefully wanted to sell it at 1.06,000 psychological level. Now this is what is meant by buy. Now, sell. This term refers to selling a currency pair in expectation that the price will fall further so that you can buy back in volumes as regard the monetary equivalence. Now this is simple. Don't take it too complex. This is what it means. If I come to the market and I saw something like this around this zone, I will want to sell. I think I have a clear picture of my screenshot that I did purposely to show you. Let me go right into the picture. Good. Now take a look at this picture. This is one of my sell positions. Now when I come to the market and the market is printing a good chart pattern and is printing my strategy, I was willing to short this market and I took my sell position here at this zone. Focus on my cursor. I'm going to explain everything to you, and my take profit is exactly at this point. Now this is a sell position. I sold the market when it was high and I bought it back when it dropped low. Now I sold it at the price of 1.5455 and I buy it back at the price of 1.49113. and this is what it meant and what I was trying to explain. Now let's go ahead. Sell. So I guess you guys understand what it means to buy. You okay, I'm buying USD, I'm selling USD JPY. This is what it meant. When they buy, they are hoping to sell. When they sell, they are hoping to buy back. Let's go forward. Now long, this term is another word for buy. You hear okay, I'm longing, they mean they are buying. And we have the next one, short. This term is another word for sell. When you hear traders say, okay, I'm shorting GBP JPY, what it means is that they are selling GBP JPY. And the next time we have bulls. This term refers to buyers in the market. When you hear the trader say, okay, the market is very bullish, the currency is just going bullish, what it means is that the market is trending high in favor of the buyers. Next, we have the bears. This term refers to sellers in the market. Whenever you are selling in the market, you are automatically a bear. You are going bearish. Whenever you are buying, you are part of the bull. Then we have the trend. Now, I want you to understand what this means. This term refers to the overall direction of a particular market at a given time. When I say market, it means any currency pair, any commodity, any crypto, any market movement that's moving, trend. This is it. Now, uptrend. This refers to a market whose direction and price is upward. Now, listen to this. Longs, buys, bulls, uptrend, they are in one category. When the market is moving in an uptrend, that's where all traders that are buying is in their favor, all traders that are going bullish, and it's also called long. Now, downtrend. This refers to a market whose direction and price is downwards. Whenever the market is moving downwards, we call it downtrend, and the market is moving in favor of the sellers. So let me go to the chart and show you what I mean. So looking at Euro USD, if I take my trend line and put it at the top here, you will see. Let me show you how to determine trend. In fact, this is secondary. You see that this trend is downward, but one key thing you need to know: when the market is trending downward, you'll be finding higher high and higher lows, higher low, lower low, higher low, and lower low. I don't know whether you understand. Let me bring another tool to explain this more better for you. Now look at this. When the market is trending in a downtrend, it will give a higher high, higher low, higher low, lower low, higher low, lower low. So this is a bearish market movement. When the market is moving in an uptrend, it gives you a higher high, higher low, higher high, higher low, higher high, higher low, higher high. So this is how we determine trends with this kind of movement. So when you pick up your trend line, if you draw it like this, you see that it's going high, it's going up, we call it an uptrend. And we pick up your trend line and put it like this, you see that it's coming down, we call it downtrend. You see arrow showing down, it's called it downtrend. So these are the simple difference. You see how easy trading is. So whenever you can spot a level, just place your position, money will be dropping your account like you are the president of your country. You see how easy that is. So that is what it means by trend. So according to this market movement of USD, the trend is down, and the market movement is most times, in fact 85% of bears, sells, say the same thing. So let's go further. Let's move further. So we have range and consolidation. Range and consolidation. Range and this term refers to a market whose trend is sideways. God, let me go back and show you what I mean. Trend is sideways. Now this box that I put on here, the market has been ranging. Now this is a 4-hour time frame. You'll see it has ranged just for a few times, but if I go down deep into 5-minute time frame, 15-minute time frame, you see that the market has really consolidated there. It has really, we call it sideways movement without a specific direction. Something like this. So something like this. Let me go to 15-minute time frame too. So where is it? So at this place, something like this place, we call it ranging market. Ranging, the market is ranging, is moving sideways without a specific direction. We call these kind of places ranging market. See that? Call it ranging market. So range and consolidation. Now this time refers to a market whose trend is sideways. So the picture I just showed you. Next we have broker. This is a company that offers you leverage to be able to participate in the forex market. Initially the forex market cannot be engaged with a very little amount of capital, but brokers have come and offers us leverage so that with our $50, $100, $3,000 we can engage the forex market. The forex market initially was meant to engage with a huge amount of money, but brokers come and offer leverage. That's why when you're opening your brokerage account, they ask you what type of leverage do you want. Is it 1 to 1,000 or 1 to 500? I think I have a detailed explanation of brokerage in one of my videos. If you check among the short clips, I think I explain what brokerage service means. So in just simple terms, it means a company of people that give you leverage to participate in the forex market. They don't only give you leverage to participate in the forex market, they offer you the platform to engage the financial market. So that is what it meant. Now see the word, another word again, leverage. This time refers to the ratio of equity offered, as simple as that. And most times it's determined by the trader. What do you want? You want to 1 to 50, 1 to 100, 1 to 1,000. I could remember saying 1 to 2,000. That is, each $1 you have, we are giving a leverage of $2,000. So if you have 2,000, you have 2,000 times. If you have $1,000, it's equivalent to 1,000 times that 2,000 leverage they offered you. That is what the forex market is seeing you coming to interface with, not your own money alone. Next, we have commission. Commission is a charge of a small percentage of money for each trading position executed. Now, for me, right now, I'm trading with a zero spread brokerage service. They don't give me any spread, so the only thing that they take from me is commission. Whenever I place a position, they take minus amounts out of my own account as a commission. Now, commission varies from one brokerage service to another. All the brokers have different ways of charging their commission, but they have to take something, of course. So now spread. I just spoke about this in my last video. I don't like trading with spread. Brokers charge you the value of the spread on a currency pair as soon as you initiate a trading position, notwithstanding if the trade ended in profit or a loss. Even the trade ended in profit or loss, they will still charge commission. So it determines. Sometimes if you are offered spread, they will not charge commission, and if you are charged commission, they will not offer you spread. That's how it works. But some other brokers charge commission and they offer spread too. You can see it will be more of exploitation. So that is what spread is. Swap fees. This is a charge when they this is a charge they place on your account when you leave trades overnight, especially for some particular currency pairs. Commission spread charges varies based on number one, the brokerage. Secondly, it varies based on the currency pairs. I think GBP AUD, my god, blew my account because of spread. I could not forget. I am a minute trader. I trade in the 1 minute and 5 minute time frame. So like I think I saw the value is around 45. It was printing on a March trader. So the spread on GBP AUD is crazy. I could remember entering a trade with 2 lots and I'm in negative $120. That's right, on GBP AUD. So like for me, I know currency pairs that have crazy spread. Like I don't trade them whatsoever. Currency pairs like GBP AUD, they are mad with spread, and even the Euro AUD is not as crazy as GBP AUD, but Euro AUD, I don't know what's happening with the AUD and the pairs, but their spread are crazy. Yeah, man. But things like Euro USD, my god, like sometimes it's 0.2. In fact, for me, it's 0. Like no spread on it, and I love it that way. As soon as I enter the place I initiated my trade, I want to see the line there, so that my calculated stop loss, my calculated take profit will not be tempered. And the reason why traders have some issues with their trading is when you calculate a stop loss, especially for minute time frame traders, people like me that trade in 1 hour, 5 minutes and 15-minute trading. Like when we have our stop loss like 5 pips, 6 pips, and we have initiated a trade and the spreads are high, we are forced to have like 7 pips or extra 3 to 4 pips outside of our own calculated stop loss or take profit, and whenever you hit our stop loss, it's going to be a crazy loss, and it affects us psychologically. So this issue of spread commission, I think is one of the things that you need to pay attention to. The next, we have take profit, stop loss, and break even. Now, take profit is one of the things that you like the most. I know you like it. Stop loss is one of your friends that will never leave you till they stop trading. Now, this in trading signifies closing a current market with profit or setting an automatic closing price. That is what take profit is. Follow my cursor. This in trading signifies closing a current market with profit or setting an automatic closing price. That is what take profit is. Most of you hearing traders say TP. So from henceforth, I'll not be saying take profit, I'll be saying TP, because I assume you've watched this video like 7 times, and as I would advise, please watch this video not only once, maybe 2 or 3 times, so that you get acquainted with the terms. So I'll be saying TP, I'll not be saying take profit. Next is stop loss. We call it SL. Like every trader mention SLs more than TP. So this means closing your positions with loss, either manually initiated or set. So that's stop loss. Then break even. This is when there is either profit or loss in capital, or adjusting of an open position to the entry price to avoid loss. Now, break even is 2 ways. Break even in an open position means that you have placed a position and the market is moving already against or in your favor, and you have closed the trades without any continuous loss or profit in that particular position. And break even on your account is you have closed the account cumulatively for a week or a month without any loss or without any profit. That's break even. And lastly, we have FOMO, fear of missing out. We have P&L, profit and loss. So these are the basic things that a trader should come up with to be able to engage the forex market. Now, this is SolFX. You do yourself a favor by liking and subscribing to this channel, so that we'll feel more motivated to draw more videos for you. And also, don't forget to share with your friends that are interested in learning how to day trade. Thank you.